Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, I seem like a broken record at this point because all that happens apparently is the market just keeps going up and volatility kind of keeps going down. I mean, you can see it's bounced around here a bit, but essentially it's been nowhere for months. It's only at 8, which is obviously very low. This is the S&P 500 at all-time highs. The NASDAQ obviously looks very similar. Same story. Straight up. Volatility fairly low. Only at 12. The only one slightly different is IWM. That's bounced around a bit more, but it's also, I believe, very near all-time highs. And volatility also at 26 is higher than the other indices, but pretty much doing nothing. So, what are we going to trade this week? Well, I'm going to give you a quick lesson in buying verticals because we do a lot of selling. I always prefer to sell volatility if we have it, but obviously volatility in the market right now is pretty low. So it's a good time to take a look at buying verticals, and we will show you how that works. And I'm going to particularly go to this one. This is XOP, which is oil and gas. It's an ETF as well. And I don't need to point out to you here that this thing has been straight through the roof and volatility is getting creamed. Because, of course, it's at all-time, not at all-time highs, but it's shooting up to the moon. Nobody is scared, and volatility is essentially at 0. And when do we like to buy verticals? When volatility is very low? Well, it doesn't get much lower than this. So I'm going to give you the option because if you're a trend trader, you're going to think that this is going to continue, up to whenever. And if you're like me as a contrarian, you're going to bet the opposite way, which is we think it's going to go down. So I'm going to show you how to do both of them so you're familiar how to do both trades. So if you go to the trade page, and we're going to go right here to 54 days because it's the monthly expiration cycle. It'll be 53 tomorrow, much more liquid than the weekly cycle, generally speaking. So that's where we're going to go. And what we're going to do is we're going to open up here. We're going to bring the strikes down quite a bit. And when we buy verticals, what we like to do is buy one strike that's in the money and one strike that's out of the money. So what does that mean? So right now the stock is at 150.63. So if I believe myself as a contrarian that it's going to go down from here, I'm going to buy one strike in the money. 151 is in the money. It's above the stock price. And 150 is out of the money. We always put the stock price between our two strikes when we're buying verticals. So if I were to set this up, I'd go to buy vertical. Here we go. And our rules for buying verticals are different than selling verticals. We have much more leeway. I say I like to buy verticals anywhere between like 45 to 55 cents per dollar width. This is a dollar width, obviously. But it's really up to you. You can do it for much less. You can buy for 40, you can buy for 60. It's totally up to you. I just like to have a rough idea of a range. 45 to 55 is the range I like to do. Now, if this trade is too small for you, if you want to make this bigger, the way we do that is we just move the strikes and we widen them out. So what that means is if I went from 151 to 152, now this is a $2 wide vertical. Again, I'm looking for 45 to 55 cents per dollar width. This is perfect because times 2. If you divide this by 2, it's 49 cents per dollar width. Still a perfectly good trade. The difference between this one and the other one is now I'm risking 98 cents in order to potentially make 102. Remember, the width of the strikes is just the max potential loss, which in this case is what we pay for something, divided by the width of the strikes equals the max potential profit, which is $102. 2 minus 98 is 102. So again, I can make this trade bigger by doing it this way, just widen the strikes. The other way was 45 cents. I was paying 45 cents, if you look here, to make, 48 cents to potentially make 52 cents, right? $1 wide minus the cost leaves me 52 cents potential profit. Okay, so that's me, that's a contrarian. How about if you are a trend trader and you want to bet that this is going to go up from here? Well, you do the opposite. You buy the strike in the money below it and you sell the one above it. So on the call side, again, we're going to buy a vertical. And that's what this looks like. We're buying the strike just below the stock price, right? And we're selling the one just above the stock price. Again, the stock price we want between our two strikes, which it is. We want to pay anywhere from 45 to 55 cents per dollar worth. This is perfect. And again, how would I make this one bigger? Well, in this case, what I might do is make this 152 on this side. And again, there we go, $2 wide. Totally fits our rules. This is about 52 cents per dollar width. Totally fine. So I'd be risking 105 to make 95. On the smaller trade, I'd be risking 55 to make 45. So that's how you buy verticals. It really is that easy. So depending on whether you're a trend trader or like me, a contrarian, you will buy a call vertical if you're a trend trader. You will buy a put vertical if you're a contrarian. And that is our trade in XOP for tomorrow. Hello everyone. I thought it might be valuable to let you know of all the courses available on Udemy that I teach, and also kind of what they're about and maybe what order to take them in. So I thought this would be a valuable little quick kind of introduction to all the courses out there. Now for those that are in the middle of a bunch of courses, these three are essentially a set. This is a part 1, 2, 3. So no matter where you are in this course selection, this is the order it should go in. It should start with understand options, then to basic option strategies, and then on to make and manage profitable trades. Just so you are aware. Again, you can see it says part 1, 2, and 3, but not everybody sees that when they buy these courses. So this is good for beginners. This is good for people that want to refresh the knowledge they already have. But essentially, like I mentioned, this is the order you want to go in, from top to bottom. Understand to basic to make and manage. The complete guide to options here is kind of an overview of a bunch of different topics, but not in depth like the three above. So if you want to get a broad introduction to a lot of different kind of option strategy topics, this is a good one to look into. From there, we can go on to the advanced Iron Condor option strategy course. If you already are familiar with Iron Condors and you want to learn 6 different variations of it, this would be a great course for you to take. And for those who have been through the basics, kind of know verticals and Iron Condors and want to get into the advanced kind of option trading arena, I have what I call a secret course collection. These are private courses that you won't find when you search on Udemy. So if you want to find them, you have to type in these addresses right here, and this will give you these courses on the right hand side here, and it'll give you more detail about them. The password to get into these private courses is sharpertrades.com. And again, like I mentioned, these are private courses. So if you search my name on Udemy, you won't see this. This is my secret course collection, and these are all more advanced topics. So if you want to learn more, here's everything you can use to discover more courses on my site. I'm attaching this guide as a link, so you can download this. It'll take you to the courses. There'll be links in the actual document, so you can use that attachment in this little video section to download and click on the links there. It'll take you right to these courses as opposed to having to type these in directly. But if you want to learn more, would love to have you aboard. Thanks for sticking with me and being with me on any one of these journeys. Stick with it. We will get you to where you want to go. Take care.